Hello everyone, welcome to the channel. Kingdom Silver here, and today I've threatened this video for a long time, but what we are going to do today is we're going to cover gold and silver ETFs. You're not going to want to miss this. Sit back, relax, and enjoy the rest of the video. Thank you so much for checking out the channel. I really appreciate it. And if you haven't already, ladies and gentlemen, please smash that like button, comment, subscribe to the channel. Helps me out, but more importantly, gets the word out about gold and silver. I want to make it clear that the purpose of today's video is not to give investment advice, right? Consult your own personal financial advisor. Make the decision that is best for you and your family. But what today's video actually is just to give you some information, and then you do your own research, additional research, and find out what makes sense for you. So what are gold and silver ETFs? So this article, as you saw earlier, is from goldsilver.com. I am going to put that link to the article in the description of this video. And at the start, it says, on the surface, a gold-backed exchange-traded fund seems harmless. An ETF, or an exchange, or an ETN, which is an exchange-traded note, is a security that tracks an index, a sector, commodity, or an asset, but can be bought or sold just like a stock. Gold ETFs, and we'll put in there silver ETFs, are no different. They track the price of a metal, but they don't require you to store any bullion, and even list the serial numbers of the bars that they hold on their websites. That sounds good, right? But it goes through here and shows, hey, there are, and we will cover all of these examples or these reasons below, that there are some negatives to ETFs. So another caveat that I want to give is that goldsilver.com and the other website that I'm going to show you are biased, right? Goldsilver.com wants you to buy physical metals from them. An ETF that I'm going to show you, ladies and gentlemen, they are biased to have you buy from them. So just take everything in these articles with a grain of salt. So in this article, we're gonna cover this section here. We're gonna call it the bad, if you will, the bad of the ETFs. And the start of this is the counterparty risk. And I'm sure that there's a lot of people already screaming, if you own an ETF, you don't physically hold the metals. And that's absolutely true. Counterparty risk, as it says here, is very simple. It means that you have to rely upon another party to make good on your own investment. And if they fail for any reason, then your investment is in jeopardy. And in here, it shows a large example of things that with an ETF you have to rely upon. So fund structure, chain of custody, management proficiency, operational integrity, delivery agreements, and regulatory oversight. So down here below, it covers the different risks. So the first risk is, hey, the emergency liability. What happens? Who takes on the risk if something happens here? And it shows in several examples here that I'll let you read. This one, for example, if in this case with the GLD, which is the Spider Gold Trust, and the SLV is the Spider Silver Trust. If the trust gold bars are stolen, damaged, or destroyed under circumstances rendering a party liable to the trust, the responsible party may not have the financial resources sufficient to satisfy the trust's claim. Another one down here, the gold bullion custody operations of the custodian are not subject to specific governmental regulatory supervision. So that is a couple of examples here of risk number one. Risk number two is administrative oversights. And I find this one really interesting here. BlackRock, the sponsor of the world's second largest, most popular gold ETF, iShares Gold Trust, admitted in 2016 that it failed to register new shares with the SEC. Exchange-traded commodity funds are required to do this, but BlackRock reported that there was a quote-unquote administrative oversight, and they sold the shares that just didn't exist yet. Well, clearly that is a problem, ladies and gentlemen. And it says down here, I love this. It says at the time of this sale, they sold $296 million worth of unregistered shares. Management blamed a spike in demand at the time for the reason that they had this oversight. This blunder clearly shows that management proficiency of this fund is lacking, and most investors were completely unaware of this development. They had no idea that this was going on. And the next counterparty risk may be the biggest of them all, and it's relying on the banks. And I would absolutely agree with this. If you are relying on banks to keep you solvent in some of these metals, as we've seen with the collapses that occurred last year in the banking industry, you're really taking your life into your own hands, as it were. So these are the bads, the bad part of ETFs. But what's really interesting in here is that they don't even talk about what I think the ugly is of this situation. And what is that? Well, quite simply, ladies and gentlemen, a lot of gold and silver ETFs, and I especially want to speak to my millennials here, because quite a few of them in articles that we've covered in the past are the ones that are highly leveraging and investing themselves in these gold and silver ETFs. GLD and SLV, major culprits in this case, they don't have allocated gold and silver to their shares. So what does that mean? Well, there are several different types of allocation that you can have with these funds. The first is segmented, which that means for every share that you buy of these stocks, right, or of these funds, there is a specific gold and silver bar that is tied to your transaction. So let's say I bought enough shares to where I had a 1,000-ounce bar. In theory, with a segmented fund, I could then go and I could say, hey, all of these shares are related to this one specific bar. We'll say the serial number is 1 million. I can trace my investment to that specific silver bar. How most of them that do have an allocation, and a lot of them don't, ladies and gentlemen, is the allocated, which means that for the shares that you buy. In this case, these allocated funds tell you that, hey, you have enough to get any one of these allocated bars or any of these bars that we have in our collection. It's just not tied to a specific serial numbered bar. Most of them are going to be allocated. I haven't run into many ETFs that are segmented. If there's anybody watching this video that does know of one, please let me know. I'd love to find out more about it. To me, again, this is the real ugly is with GLD, SLV. In fact, this is where you hear the term paper gold, because right now, I forget what the exact numbers were, but I think I'm safe in saying it's at least over 300 to 1 that you can say, oh, I've got this share of gold or silver, but the physical metals that are actually backing that one share, ladies and gentlemen, it's at a 300 to 1 ratio. So for those that want to stay away from gold and silver ETFs, there's some logic, right? There's some reason behind that. However, I'm going to share with you guys, and again, this isn't investment advice. This is a trust, an ETF that I have found that I believe is very solid, and I have personally faith in, and it's Sprott. Sprott, in this case, it's the Sprott Physical Silver Trust. They also have the Physical Gold Trust, and I believe even Platinum as well. But definitely do research on this. I'll put links to all of these websites in the description. But this is the positive side. This is the good, right, of the silver ETFs. And to me, it's great to have, and I preach this, you want to have physical gold and silver. However, for those that have IRAs, right, you want to get some exposure, right, in those accounts to silver. Now, you can open a physical trust, silver IRA or gold IRA, those exist. But what if you're just looking in the main market with, let's say, an old, 401k account from a former employer? How's best to go about that? Well, to me, Sprott is a good answer. And here's the good things about them. One, right here, see this in everything that you look for in these ETFs, fully allocated silver, right? Got to go with it. It says this trust only holds fully allocated and unencumbered silver. No exceptions. PSLV, which is the ticker, exclusively invests in the London Good Delivery physical silver bullion. They're also redeemable for metals. We'll cover that in a little bit. There's often several places that say GLD, SLV, that, hey, you can redeem these, but you have to reach a certain limit. That's the case for Sprott, and it's a pretty high limit, but just knowing that you can redeem these metals, I think makes a lot of sense. 3 is trustworthy storage here. The trust metal will be held in custody by the Royal Canadian Mint, a federal corporation of the government of Canada. There is no levered financial institution between the unit holders and the trust's physical bullion, and no risk of financial loss and the risk of bankruptcy. It goes into potential tax advantage, the ease in which to buy, sell, and own, which I would say, if you want to get in and out, you're playing, the game of watching the highs and then doing some profit taking on gold and silver. This would be a great way. And hey, it's a liquid investment. It's not like physical gold and silver where you got to haul it to a coin store or somewhere else to sell it. You can get in and out pretty quickly. And this is another screen that I wanted to show you, ladies and gentlemen. It's the metal per unit, and this shows that their allocation. If you buy 1 unit of PSLV, it is equal to 0.3447 ounces of silver. And for the Gold Trust, they have these numbers as well. Now, I wanted to also cover how you redeem this physical bullion, because I do think this is a little bit of a drawback. If you look at this, and this is several of the trusts that they have. So for the physical Gold Trust, you have to own 400 ounces before you can redeem it. And then for Sprott Silver, you have to have 10,000 ounces of silver. Now, I'd love to get to somewhere in my life, ladies and gentlemen, I hope I can one day, where I could redeem that much through them. However, that might be a while, right? So to me, they say physical redemption. To me, that's a little bit misleading. But hey, if you're a big player in this, they do allow this to happen. So that's the positive. This is a little bit longer video, but I really wanted to dive into this. What are the advantages of gold and silver ETFs, and what are the disadvantages? And I think it depends is the answer, right? I'm not here to convince anyone. If you are a physical gold and silver or precious metals person and say, hey, I'm only getting physical gold and silver, I see no problem in that. I completely understand that. However, I do think there are some advantages to these trusts, especially if you get the right one. If you get like this trust as opposed to the GLD or the SLV, I think you've got a really good, opportunity here. And again, not investment advice, but to me, it's both and, right? You need physical and you need access to digital, because I'd much rather invest in one of these trusts than invest in some static, fund, right? That you'd have to do with a standard 401k or IRA. So I think you need both. But in the comments, I'd love to hear what you, ladies and gentlemen, think about this. Are there other ETFs that you're invested in other than Sprott or other than GLD, SLV, and why? And if you're not, would love to hear the reasons as well. I love the discourse. I love the feedback. So without further ado, we're going to end this video. Again, a longer one, but I think it's important to nail down what these trusts are, what these ETFs are, and if they might be something that's good for you. Be blessed, ladies and gentlemen, and be a blessing to others. We'll see you later.